Joining me now, Peter Van Kerckhoven, who is co-head Debt Finance, Nedbank Corporate and Investment Banking. One of the key talking points, Peter, that you've observed is around Article 6. Unpack it for us and give us your sense of where exactly we are in terms of carbon credits and potential carbon credit trading.
Thanks, Bronwyn. Yeah, so I think the big question being asked is how is the world going to fund this transition? And one of the mechanisms that's being discussed is carbon credit trading. In fact, carbon credit trading in Article 6 was signed into the Paris Agreement at COP27 a year ago. And the discussions here are really how to give effect to those elements of Article 6. It's a tricky one because there are opponents to Article 6 which say if you allow countries and governments and corporates to buy credits, it's going to divert their own investment away from on-the-ground adaptation and resilience initiatives. The proponents to it are saying, well, it's the only way that the globe can effectively finance adaptation and mitigation, and especially in developing countries where you don't have that availability of finance. So carbon trading markets can enable a very effective financing mechanism for those projects, but it has to be done in a very controlled way, where you put proper guardrails around it not being abused.
Do you think we should have a robust carbon credit trading environment?
Absolutely. Absolutely. I mean, as a banker and understanding the capital stack and the role of debt and equity and economics and viability of projects, carbon credits can really take projects that may not be economically viable or maybe sub-economic and make them economic. They can close equity gaps in projects. They have a very critical role to play, I would believe.
Look, we've tried this before and it basically fell over because there was no momentum, and if you don't have all players aligned, it just won't get off the ground.
Exactly, and you're right. The initial carbon credits really fell flat on the basis that demand for the credits evaporated overnight. And that's because there was no policy framework that drove the need for countries and corporates to buy the credits. So what you do now is you provide a framework based on net zero pathways to force, in essence, force companies to decarbonize in one shape or form. And in fact there'll be a blend of decarbonizing their own operations, and for those hard to abate elements of their operations to buy credits to get them to net zero.
How long do you think we're going to observe this game before it plays out into something that is actually tangible?
I think it might be sooner than we think. You know, if I listen to the discussions happening now, they're really getting into the long grass of how these work. And I've actually talked to companies from the US that are already buying credits for their clients in the United States. Interestingly, one of them from a wind project in South Africa. So it's happening, it's just not happening at scale yet.
Before we go, we need to chat about the Just Energy Transition Plan. Just your comment, it was launched here by President Cyril Ramaphosa as South Africa's initiative.
Yeah, I think it's an amazing plan. Again, it's giving effect to the commitment that was made at COP26 around the $8.5 billion that would be committed to our Just Energy Transition. We've now delivered on that plan. That is actually the first step in deploying the $8.5 billion and actually scaling that up with commercial funding, like the funding we would provide. So it's now going from a plan through to implementation, which is always the hard part. What was encouraging is that you will have heard that the Treasury, South African Treasury, signed a 600 million euro loan agreement here at COP, I think on Wednesday, which is actually the first funding of that $8.5 billion that's now in play. So it's now no longer just talk, but it's actually a loan agreement that's been signed. So it's our first runs on the board.
It's implementation, which...
Yes, and now we need to deploy it onto the ground. And like Barbara Creasy actually said in one of her panel talks at the South African Pavilion was, we're really good in the brains department. We now need to get into the spanner department.
Great place to leave it. I've been chatting to Peter Van Kerckhoven, who is the co-head debt finance at Nedbank Corporate Investment Banking.